Level 1, $0. You check your account on the 14th because rent is due on the 1st, and you already know what the number will be. $47.82. The grocery run yesterday took more than you thought. You did the math in the checkout line, but the tax always lands different than the estimate. Your roommate Venmo'd you $440 for her half of rent and utilities. You sent $880 to the landlord this morning. You have $47.82 until Friday when your paycheck hits. You eat the same lunch 4 days in a row because the ingredients for meal prep cost $23 and stretch further than anything else you calculated. Your college friends are meeting for drinks Thursday night. You say maybe. You will not go. The math is already done. Level 2, $2,400. 6 months into the new job, you stop checking the account every morning. The number holds. Your rent is $920 now because you moved to a studio in a better building. You buy the nice coffee twice a week instead of never. You replace your phone when the screen cracks instead of waiting. Your checking account stays above $2,000. And you open a savings account that has $2,400 in it. You contribute $200 every paycheck. This feels like wealth. You go to the drinks on Thursday. You split an appetizer. You have 3 drinks instead of nursing 1. The bill is $47. You put it on your card. You do not think about it again. On Sunday, you buy new sheets because the old ones are pilling and you are tired of them. They cost $89. You buy them. Level 3, $18,000. At 28, you switch jobs and negotiate. They offer $76,000. You say $82,000. They say $79,000. You take it. Your savings account has $18,000. You could lose your job today and pay rent for 11 months. You know this because you calculated it. The knowledge changes how you sit in meetings. You contribute 6% to your 401k because they match 6%. Someone at work mentions a Roth IRA. You open one that weekend. You put in $6,500 before the tax deadline. You read 3 articles about index funds. You buy VTSAX. You do not understand it completely, but the math in the articles makes sense. Your college roommate gets married. You buy a plane ticket to Denver without checking if you have the miles. You do not have the miles. The ticket is $340. You buy it the same day she sends the invitation. Level 4, $58,000. By 31, your salary is $94,000. Your savings account has $23,000. Your Roth IRA has $35,000 because the market went up. You understand that the market can also go down. You keep contributing. You have $58,000 in total. You calculate that you could not work for 14 months if you spent conservatively. You calculate that you could not work for 8 months if you maintained your current lifestyle. You maintain your current lifestyle. You buy the organic vegetables. You get your haircut at the place that costs $78 instead of $45. You subscribe to services that pull $47 a month total. You notice them on your statements. You do not cancel them. Your friend mentions a financial advisor. You do not call one. The math is simple enough. You increase your 401k contribution to 12%. Your paycheck shrinks. You do not notice the difference in your daily spending. Level 5, $340,000. At 35, you have $340,000. Your salary is $126,000. Your 401k has $198,000. Your Roth IRA has $87,000. Your savings account has $55,000. You got promoted to senior manager. You bought a condo. The down payment was $78,000. You took $68,000 from savings and your parents gave you $10,000. Your mortgage is $2,340 a month. This is more than you paid in rent. Your total housing costs with taxes and HOA is $3,100. You pay it. You still save $1,800 a month. You fly to visit your sister without checking ticket prices. You buy the direct flight that leaves at a reasonable hour. Your friends talk about financial advisors now. One of them works with someone who requires $250,000 minimum to take clients. You qualify. You still do not call. You read about mega backdoor Roth conversions. You do not do one because your plan does not allow it. You check your accounts once a month now instead of once a week.
Level 6, $890,000.
You are 40. You have $890,000. Your salary is $163,000. Your 401k has $487,000. Your Roth IRA has $198,000. Your taxable brokerage has $142,000. Your savings account has $63,000. Your condo is worth $615,000. You owe $298,000 on the mortgage. You got promoted to director. You manage 8 people. You interview candidates and decide who gets hired into salaries that would have changed your life at 24. You approve or deny requests for raises. You know what everyone on your team makes. Some of them have more saved than you did at their age. Some of them have less. You can see the pattern of who will be where in 10 years. You say nothing. You increase your 401k contribution to 15%. You max out your Roth IRA by February every year. You set up automatic investments in your broker's account. $3,000 goes in every month. You do not decide where it goes anymore. You set an allocation years ago. The money distributes itself. Level 7, $2,100,000. At 45, you have $2,100,000. Your salary is $208,000. Your 401k has $940,000. Your Roth IRA has $387,000. Your brokerage account has $548,000. Your home equity is $425,000. You sold the condo and bought a house. You put down $240,000. Your mortgage is $4,100 a month. You pay it the same way you paid $880 15 years ago. The number is different. The automatic transfer is the same. You got promoted to VP. You are in meetings about budget allocation. You approve department spending. Last month, you signed off on $340,000 for a software implementation. You spent 25 minutes reviewing the decision. Your 22-year-old self worked for 6 years to save that amount. You do not think about this during the meeting. You contribute the maximum to your 401k. You contribute the maximum to your Roth IRA. You put $4,500 a month into your brokerage account. You own individual stocks now in addition to index funds. You bought $50,000 of your company's stock at a 15% discount through ESPP. It is up 32% in 2 years. You sold half and diversified. You kept half because of tax treatment. You understand tax treatment now. Level 8, $4,700,000. You are 52. You have $4,700,000. Your salary is $284,000. Your 401k has $1,840,000. Your Roth IRA has $680,000. Your brokerage account has $1,520,000. Your home equity is $660,000. You can retire now using the 4% rule. That will give you $188,000 a year. You make $284,000. You do not retire. You got promoted to SVP. You are on the executive team. You sit in meetings about corporate strategy. You decide which departments get funding. You approve headcount. You lay people off when the budget requires it. You laid off 43 people last year. Some of them had been with the company for 12 years. You did not know most of them personally. You knew their salary bands. You calculated the savings. The company's stock went up 7% the quarter after the restructuring. Your shares increased in value by $67,000.
You check your net worth once a quarter now.
The number always surprises you, even though you know the approximate range. Last quarter, it jumped $340,000 because the market was up. You did not change anything about your life. You still buy the organic vegetables. You still get your hair cut at the same place. The price is $95 now.